Hello everyone, how are you all? Hope you all are doing well. So we would be doing what? Revision for input tax credit. Input tax credit revision, marathon revision we are doing. So very important chapter and we'll do it very quickly. Who can take the ITC? First we'll see eligibility and the conditions for ITC. Who has to take the ITC? Registered person. The one who is registered under GST can take input tax credit of the taxes which he has paid either on inward supply of goods or services which are used or intended to be used, either used or intended to be used in the course or furtherance of business. So it should be either used or there should be intention to use in the course or furtherance of the business. Then you can take the credit of what? Inward supply of goods as well as services which are used or intended to be used in the course or furtherance of business. You can take the ITC. Now what are the conditions for taking ITC? So there are conditions for taking ITC. He should be in possession, he should be in valid invoice and debit note prescribed tax paying document. So the person should have what? Either valid tax invoice or debit note or any other prescribed tax paying document. Then only he can take the credit. He should have furnished the valid return should be furnished. Tax should be actually paid to the government. The details of the tax invoice debit note should be furnished by the supplier in the statement of outward supply. What is the statement of outward supply? Either GST R1 or IFF. So he should furnish what? Details of outward supply. The details of invoice debit net should be furnished in what? Statement of outward supply. Then the ITC in respect of the supply communicated to the registered person shall not be restricted. The ITC should not be restricted. The ITC which is should not be restricted. And then you should have received the goods and services. You should have actually received the goods and services. Then only you can take the ITC. Then only you can take the ITC. So you should have actually received the goods and services. However in case of bill to ship to model, it will be deemed that registered person has received it and he can take the credit. Okay, the same will apply in case of services also. So when the services are provided to any person on the direction of the or on account of registered person, it will be deemed that registered person has received it and he can take the credit. You remember bill to ship to scenario? For example, A is the supplier of the goods, B is the recipient of the goods, C is the person to whom the goods are being sent, shipped to C, however billed to B. So who will take the ITC? ITC will be taken by B. Place of supply will be fixed at B's place only. Okay, so this is called as bill to ship to model, where a bill to is in our example like to B, so he will take the ITC. However, goods are shipped to C. So this is bill to ship to model. Next, when the goods are received in lots, in that case ITC will be allowed on receipt of last lot. Okay, so when the goods are received in lots, many a times in exam they ask this question. So when you are receiving the goods in lots or installments, in that case when you are receiving the last lot or installment, at that time you will take the ITC. In that month you will take the ITC. If depreciation is claimed on tax component, that ITC is not allowed. Okay, so depreciation, if you are claiming on tax component, on value you will claim depreciation, that is not a problem. On GST component, if you are claiming the depreciation by capitalizing it, then you can not take the ITC. Either you can take benefit under Income Tax Act or GST Act. Okay, now bill to ship to model we have already discussed. What is the time limit for availing ITC? What is the maximum time limit for availing ITC? So suppose by some reason you missed some invoice, the supplier has not sent it or you have not accounted for it. So in that case, when you can take the ITC? What is the time limit for availing ITC? So ITC pertaining to a particular financial year can be availed by 30th November of next financial year. When you can avail it? 30th November of next financial year, or filing of annual return, whichever is earlier, whichever is earlier. So when you can avail the ITC? 30th November of next financial year, or filing of annual return, whichever is earlier, Okay, so for 24-25, for example, up till what time you can avail the ITC? What is the maximum time? Either 30th November or filing of annual return. Now if you are 30th November 25 or you are filing the return, say for example on 15th August 25, then you up till what time you can take ITC? 15th August 25. But if you are filing the annual return by say 31st December, so in that case 30th November or 30th December, 31st December, whichever is earlier, so 30th November. So what is the maximum time limit for availing ITC? 30th November of the next financial year, or filing of annual return, whichever is earlier, or filing of annual return, whichever is earlier. The exception is re-availment of ITC reversed earlier. What is the exception? Re-availment of ITC which has been reversed earlier. So if you are if you have what, availed the ITC earlier, if you have availed the ITC earlier, and then now if you are what you are doing, you have availed the ITC earlier, okay, and now if you have to reverse it due to some reason, that we'll see in rule 37, 37A. So if you are reversing it, then when you would be re-availing it, there is no time limit. After 10 years also you can re-avail it. So on re-availment of ITC, there is no time limit. There is no time limit, okay. Next, rule 37, very simple rule 37. You remember we have done it in the class. So, reversal of ITC in case of non-payment of consideration. Now, if the whole value wholly or partly, either wholly or partly the value along with the tax is not paid to supplier within how many days? Within 180 days from the date of issue of invoice. Within 180 days from the date of issue of invoice, he shall pay or reverse an amount equal to the ITC availed proportionate to the amount not paid to the supplier along with the interest payable while furnishing 3B for the tax period immediately following 180 days from the date of issue of the invoice. So now here what is this thing? So now for example, supplier has sold goods to the recipient. In how many days he should make the payment? 180 days of value plus tax. For example, the value is 1 lakh, the tax is 18,000. So 1,18,000 the recipient should pay to the supplier. Recipient should pay to the supplier within 180 days. Within 180 days. 180 days from which? From the date of issue of invoice. From the date of issue of invoice, within 180 days he should have paid to the supplier. The recipient should have paid to the supplier. However, now if he has not paid within 180 days, not paid within 180 days, for example, he has not paid the whole amount within 180 days, then the what recipient has to do earlier, for example, when he has purchased the goods and this invoice must have received, he has already taken the credit already. When he has received the invoice, he have taken the credit, but 180 days has he has not made the payment by 180 days also. Then in that case, what he has to do? He has to reverse this credit of 18,000 along with interest. Along with interest, he has to reverse this amount. When he will reverse? While furnishing 3B for the period immediately following 180 days. After the completion of 180 days, whatever 3B comes in that, he will reverse it along with interest. Reverse it along with interest. Okay. Now, here, if he has not made full payment, then he has to reverse the full payment, full tax. If he has partial made the payment, then he has to reverse the partial amount. He has to reverse the partial amount. The one which is not paid, he has to reverse that amount. Okay. Now what are the exception to this? Reverse supply under reverse charges. Okay, so in this, that means 180 days time limit is not applicable. You need not reverse anything even if you don't make the payment to the supplier, because very simple. In case of reverse charge, the responsibility to pay tax is on the recipient to the government, so doesn't make a difference. So what is the exception over here? Supply under reverse charge. Deemed supply without consideration. You remember deemed supply without consideration, schedule 1 items. There is no value only. What payment you will make to the supplier? So deemed supply without consideration is also an exception to this. And then addition made to the value of supply on account of supplier liability in relation to such supply being incurred by the recipient of the supply. And what is the third thing? Whatever is the addition made to the value on account of which is the supplier liability, third party payment actually in relation to supply, but bit incurred by the recipient, but it is incurred by the recipient. So this also what? These all are exception. In this 180 days time limit is not applicable. Rest all the cases, the value plus tax should be paid to the recipient by 180 days along with interest. Okay, I hope it is clear. Next, 37A. So rule 37(8), you remember this diagram? For example, Mr. A is a supplier. Okay, he has supplied to Mr. B, who is a recipient. Mr. A has filed GSTR1, the statement of outward supplies, on the basis of which Mr. B has taken the credit. He has availed the credit. However, Mr. A has not filed GSTR3B. GSTR3B has not filed till what date? Till 30th September of next financial year. He has not filed GSTR 3B till 30th September of next financial year. So in this case, by 30th November, Mr. B has to reverse the ITC. The credit which he has already availed, he has to reverse it. Supplier has filed GSTR1, but he has not filed GSTR 3B till 30th September of next financial year. Then recipient will reverse ITC by 30th November. Now, for example, Mr. A files GSTR 3B in December, so then Mr. B can re-avail the credit. And on this re-availment of credit, there is no time limit applicable. Similarly, in case of Rule 37 also, in this rule also, if later on the recipient makes the payment and then he can re-avail the credit, at the time of re-availment of credit, again there is no time limit applicable. Okay. Now, apportionment of credit, section 17. You remember, in case of apportionment of credit, the goods or services which are used partly for the business and partly for non-business purpose, the goods or services which are used partly for business, partly for non-business, and partly for used for making taxable, including zero rated supply, and partly for exempt supply, then ITC is available which is attributable to business purpose. ITC is available as attributable to business purpose only, or taxable including zero rated supply. Okay, this much only you have to remember. The ITC is definitely not available towards, for example, non-business purpose or exempt supply, but how the calculation is done, we will see very soon in finals. Now you would be reaching finals very soon. Just maintain confidence, write best paper, and definitely will be in finals very soon. Okay. Now, value of exempt supply. So value of exempt supply for the purpose of section 17 only this is applicable. Rest everywhere in GST law. What do you mean by exempt supply? Exempt supply means three things. What? Nil rated supply, wholly exempt supply, and non-taxable supply. But for the purpose of section 17, for the purpose of rule 40 to 43, if sometimes they'll ask you exempt supply, then that would be what we will see once. But they should not ask you, for the purpose of calculation of reversal of ITC, it is particularly being used, but the reversal of ITC is not in your syllabus, rule 40 to 43 is not in your syllabus, so they should not ask you. But if sometimes they ask you what is exempt supply for the purpose of section 17 or for rule 40 to 43, then only you have to do this. So what do you mean by exempt supply for this purpose? Nil rated supply, wholly exempt supply, and non-taxable supply. Okay, so this is exempt supply for full law. But for the purpose of section 17, these two things are also important. What? It will include supply under RCM, transaction in securities. The transaction in security value, you will take 1% of the sale value of the securities. Then sale of land and building, where the consideration has received after completion certificate, that will also be included. And supply of warehouse goods before clearance for home consumption. This will also be included in your exempt supply. So these are the four things which will be included in your exempt supply. What? It will include supply under RCM, transaction and security, then sale of land and building where consideration is received after completion certificate, and supply of warehouse goods before clearance for home consumption. This all will be included in exempt supply. And what will be excluded in exempt supply? Service of accepting deposit, loan, advances where consideration is interest on discount by a person other than banking company, financial institutes. Then value of duty credit scripts, and then activities specified in schedule 3. Except sale of land and building where consideration is received after completion certificate, and sale of warehouse goods before clearance for home consumption. This will be what? This will be this, because these 2 points are what? These are included in the value of exempt supply. Okay, so these 4 things are included in the value of exempt supply, you have to add for it for the purpose of calculation of exempt supply for the purpose of section 17, and you have to exclude these three things. Even though these things are this is exempt supply, what service of interest on loan deposit advance, but you have to exclude it for the purpose of section 17. Then value of duty credit scrip you have to exclude in, and all the activities of schedule 3 except these two will be included in the value of exempt supply. Okay, next is block credit. Okay, very important, undoubtedly from exam point of view. Block credit, the credit is blocked, the credit is not available. First is motor vehicle. You remember, for transportation of passenger having approved sitting capacity of not more than 13% including the driver. Okay, so up to 13% it is what blocked. Credit is not available. Okay, if it is a 20-seater motor vehicle, then in that case, for example, a 20-seater bus, then the credit is available, that is not a problem. Okay, of not more than 13%, up to 13% including the driver, for transportation of passenger, if you are using a motor vehicle, the credit is blocked. Now, what is the exception to this? Exception to block credit means the credit will be available. What is the exception? Except when they are used for taxable supply for further supply of motor vehicle. If it is used for further supply of motor vehicle, in that case credit is available. Okay, so if Maruti Suzuki dealer is purchasing the motor vehicle, 5-seater motor vehicle is purchasing for what? For further supply of motor vehicle, then the credit is available. Second, for transportation of passenger, I am having, my work is, taxi, this transportation of passengers. So in this case I have a taxi company. So in this case, the credit will be available. Yes, the credit will be available. Why? Because I am using it for transportation of the passengers. And then imparting training or driving on such vehicles. If I am imparting training or driving on such vehicles, then also the credit is available. Okay, I am in driving school, I have purchased 5 motor vehicles, so the credit will be available, not a problem. And if I am using any motor vehicle for transportation of goods, the credit will always be available. So I have purchased a truck for transportation of the goods. So is the credit will be available? Yes, credit will be available. So in these 4 scenarios, credit will be available. When you are using the motor vehicle for further supply of motor vehicle, second, transportation of passengers, and third, imparting training driving on such vehicle, and then for transportation of goods, you are purchasing a motor vehicle, credit will be available. Second, vessel aircraft. For vessel aircraft, the credit will be blocked, except when they are used for. So when the credit will be available, again we will see. If you are using it for further supply of vessel or aircraft, credit will be available. Then transportation of passenger, credit will be available. Imparting training, driving, navigating such vehicle, training will be available. Imparting flying on such aircraft, credit will be available. And then for transportation of the goods, credit will be available. So in the following cases, the credit will be available. Otherwise, credit of vessel aircraft will not be available. Then service of general insurance, servicing, repair, maintenance, in so far as they relate to motor vehicle, vessel, aircraft referred to in clause A or AA, is credit will not be available. So what is the service? Services of general insurance, servicing, repair, maintenance. Okay, so service of all these things as far they relate to the motor vehicle, vessel or aircraft, then the credit will not be available. So all these cases, general insurance, servicing, repair, maintenance, credit will not be available. In so far as they relate to motor vehicle, vessel or aircraft. So if the credit of the motor vehicle, vessel or aircraft is blocked, the service of general insurance, servicing, repair and maintenance of that motor vehicle, vessel or aircraft will also be blocked. Okay, when the credit of motor, for example, I have purchased a car, 5-seater car, the credit of it is blocked. So the general insurance, if I am purchasing for that car, that will also be blocked. The repair and maintenance of that will be blocked. Any servicing, if I am taking for that motor vehicle, that will also be blocked. If the credit of motor vehicle, vessel, aircraft is blocked, then 3 things, general insurance, servicing and repair and maintenance of that will also be blocked. Now, exception to this rule, again, when the credit will be available, where the motor vehicle, vessel, aircraft referred to in clause A or A are used for the purpose therein. That means if if the credit is available, for example, in these scenarios, when the credit of the motor vehicle, vessel, aircraft is available, then the credit of the general insurance, servicing and repair maintenance will also be available. Okay, so you are a motor car dealer, you have purchased motor vehicle for the further supply, so the credit of motor vehicle is available. So in that case, the general insurance, if you are taking, that will also be available. Any servicing, repair, maintenance, whatever you are doing, that will credit will also be available. Okay, in the exception scenarios, all the credit will be available. Then where received by person in the manufacture of motor vehicle, vessel, aircraft. So you are a manufacturer of motor vehicle, vessel, aircraft, you are a manufacturer. So in that case, the general insurance, service or repair maintenance will also be available, So when you are a manufacturer of these things, then the credit of this will also be available. General insurance, repair and maintenance services, the credit will be available. Then in the supply of general insurance service in respect of such motor vehicle, vessel or aircraft insured by him. So you are an insurance service, you are providing general insurance services, okay, in respect of motor vehicle, vessel, aircraft. So in that case, if you have purchased this, what general insurance, or you have taken any repairing services and all, that credit will be available. So the manufacturer of motor vehicle, vessel, aircraft, or the general insurance services, the one who is providing for motor vehicle, vessel, aircraft, if they are taking general insurance, repair services and repair maintenance, then the credit is allowed. Okay, next is food and beverages, outdoor catering, beauty treatment, health services, cosmetic, plastic surgery, leasing, renting, hiring of motor vehicle, vessel or aircraft, except used for the purpose specified therein. Then life insurance, health insurance, the credit of all these are blocked. Okay, so food and beverages, your boss is giving you a party, he has ordered some food and beverages from a restaurant. Is the credit allowed to him? No, credit not allowed. He has arranged a new year party for which he has given an order to an outdoor catering for 50 people. So is the credit allowed? Not allowed. Beauty treatment, this beauty treatment, cosmetic, plastic surgery, lot of treatments, these cosmetic surgeries, these actors, actresses go, even if for the purpose of their business profession. But is it allowed? No, it is not allowed. Okay, health services credit not allowed. Then three things again: leasing, renting or hiring of motor vehicle, vessel or aircraft. What? Leasing, renting or hiring of motor vehicle, vessel, aircraft, again blocked. When it is allowed? When the credit of the motor vehicle is allowed, vessel or aircraft is allowed, the given which in exceptions, then the credit of leasing, hiring or renting is allowed, otherwise not. Then life insurance credit not allowed, health insurance credit not allowed. So these are the blocked credits. Block credit, again exception to the block credit, means the credit will be available in the following scenarios. Credit will be available. What are those? ITC is available where an inward supply of such goods or services or both is used by a registered person for making an outward supply. So when the ITC is available, where an inward supply of such goods or services is used by a registered person for making an outward taxable supply, then the credit is allowed. So ITC is available where the inward supply of such goods or services is used for making an outward supply of the same category or both as an element of taxable or composite or mixed supply. That means when I am using, for example, I am using food and beverages for making an outward supply. I have a business of restaurant. So why I have taken food and beverages? Because my outward supply of the same category, then it is allowed. Or for example, I have, I've purchased food and beverages. Why? Because it is a part of, for example, I'm Indico. Okay, so Indico is providing you services for passenger transportation. Okay, so for when he is booking the flight, he is also booking for some food. So it is a part of composite supply. Or mixed supply in this food. That in that case also credit is allowed. So when it is an input service for your output service, either in the same category or as an element of mixed or composite supply, credit is allowed. And then when it is obligatory for an employer to provide the same to its employee under any law for the time being in force. For example, this health insurance, life insurance. Okay, so the coal mines act says that though it is obligatory for the employer to take health insurance for their employee. So in that case it will be allowed. So when it is obligatory for an employer to provide the same to its employee, then it is allowed. So if some law makes it compulsory for the employer to run canteen for its employee, so in that case it will be allowed. Okay. So in these cases, credit will be allowed. Next, membership of club, health and fitness center. Is the credit allowed? No, credit not allowed. Membership of club, health and fitness center, credit is not allowed. So if you are taking gym membership and all, so is that allowed? If the employer is providing all its employees the gym membership free of cost, even though GST is charged on that, the credit of that is not allowed. So membership of club, health and fitness center, credit is not allowed. Then travel benefits extended to employees on vacation such as leave or home travel concession. And next is what? Travel benefits. If you are extending what? Travel benefits to the employees on vacation such as leave or home travel concession. Is the credit allowed? Credit is not allowed. So the travel benefits which is extended to the employees, on vacation such as leave or home travel concession, the credit is not allowed. The credit is not allowed. Okay, so whenever there is a travel benefit which we are extending to employee, for example, the employer is giving the employee free tickets to Bali, Thailand, Singapore, whatever. So even if GST is charged on that, the credit to the employer will not be available. Credit to employer will not be available. Okay. Again, what is the exception? When it is obligatory for an employer to provide the same to the employee, then it is allowed. Then goods lost, stolen, destroyed, return of, disposed of by way of either gift or free sample. So now your goods are lost, your goods are stolen, your goods are destroyed, return of, disposed of either by way of gift or free sample. Is the credit allowed? Credit is not allowed. Credit is not allowed. Inward supply used for personal consumption. Is the credit allowed? Credit is not allowed. Okay, inward supply used for personal consumption. Is the credit allowed? Credit not allowed. Then work contract for construction of immovable property. Now what is this? If you are taking work contract services for construction of immovable property, is the credit allowed? No, credit is not allowed. Work contract for plant and machinery, is the credit allowed? Yes, for plant and machinery credit is allowed. Or where the work contract of immovable property is input service for further supply of work contract, like subcontracting. So I am a work contractor. I have received, for example, an order for some portion for erection part, for example, I have subcontracted to someone. So credit to me will be allowed. I'll get the credit because it is an input service for my output service. It is an input service for my output service. We have done a lot of examples on all these points, okay, but now it is marathon, so time doesn't permit us. So in these two cases, work contract for plant and machinery available, and second, when it is an input service for further supply of work contract, then also it is available. Next, inward supply received by taxable person for construction of immovable property on his own account, including when such supply are used in the course or furtherance of business. So what is this? Inward supplies received by taxable person. So you are receiving a inward supply for construction. You're constructing your immovable property, your own office you're constructing, okay, including when such supply are used for the purpose of the business. So in this case, is the credit will be allowed? Credit will not be allowed. Okay, so what you are getting, you are purchasing, for example, goods and services, you are getting inward supplies for construction of your own immovable property, you are making your own office, for example. So is the credit allowed? Not allowed. Credit is not allowed. Again, what is exception? Construction. If you are constructing plant and machinery, credit is allowed. What do you mean by plant and machinery? We'll see in some time. So for on plant and machinery, credit is allowed. Or construction of immovable property for others. For example, you are constructing for you're a builder, you are constructing for others, then in that case it will be allowed. Okay. So on your own account it is not allowed. It is very clearly written, on your own account it is not allowed. Okay. Next, inward supply charged to composition levy. In case of composition levy, we very well know in any case the input credit is not allowed. To whom he is selling, he also cannot charge the tax. Okay, so composition dealer, if he is getting any inward supplies, obviously he is not eligible for input tax credit. Goods or services received by NRTP. The NRTP, whatever, non-resident taxable person, he is receiving any goods and services, credit is not allowed. Exception, ITC available on goods imported by him. If he is importing some goods, obviously on imports he can take the ITC. On domestic supply of goods and services, he cannot take. Whatever domestic supplies he has taken, he cannot take the ITC. But on imports, definitely on goods imported by him, he can take the ITC. And then last, Tax paid under section 74, that is on not short paid, not paid, erroneously refunded, or tax paid under section 129, that is amount paid for release of goods and conveyance in transit which are detained, and amount paid under tax paid under section 130, which is fine paid in lieu of confiscation. Under these three sections, under 74, 129 and 130, if you are paying the taxes, you cannot take the credit. Okay, I hope it is clear. Now next, construction here includes. Construction includes reconstruction, renovation, addition, alteration, repairs to the extent of capitalization to the said immovable property. So what do you mean by construction? See, work contract on construction of immovable property is not allowed, or construction or inward supply for construction of immovable property is not allowed. So it is important, what do you mean by construction? So construction includes reconstruction, renovation, addition, alteration, repairs to the extent of capitalization to the said property, to the extent of capitalization. If something is charged to revenue, then it is allowed. If you are capitalizing it, then it is not allowed. Then plant and machinery means what? Plant and machinery means apparatus, equipment, machinery fixed to earth by foundation or structural support. Okay, so plant and machinery means apparatus, equipment, machinery which is fixed to earth by foundation or structural support, but excludes all these three things. What it excludes? Land, building, civil structure, telecommunication towers, pipeline laid outside the factory premises. Okay, so plant and machinery means what? Apparatus, equipment, machinery fixed to earth by foundation and structural support. But what it excludes? It excludes land, building and civil structure, telecommunication towers and pipeline laid outside the factory premises. So this is excluded from plant and machinery. That means it is an immovable property and credit on this will not be allowed. Credit on these three things will not be allowed. Okay, so any work contract, service or inward supplies for construction of these telecommunication tower, pipeline laid outside the factory, land, building, other civil structure, the credit will not be allowed. Other plant and machinery obviously allowed. Okay, so I hope this is clear. This is regarding what? Block credit. And one more last point in this block credit is what we'll see. Goods or services received for CSR. You all know CSR, corporate social responsibility. Is the credit allowed? No. If you are receiving any goods or services which are used or intended to be used relating to obligation under corporate social responsibility, credit is not allowed. Okay. So goods or services received for CSR, is the credit allowed? Credit is not allowed. Okay. Next, clarification on ITC in the hands of supplier in respect of certain sales promotion scheme. So in case of certain sales promotion scheme, very simple things like free samples and gifts. Okay, so obviously ITC is not available in case of free samples and gifts that we have already seen. So ITC shall not be available to supplier on input services, capital goods. They are used in relation to free samples and goods which are distributed without consideration. Then buy one get one offer. In mall we go, many a times we get the offer buy one get one offer. So in that case ITC will be available. That is not a problem. Okay, so ITC will be available to supplier for whatever input services, capital goods which he is using as a part of this offer. Okay, if I am purchasing a t-shirt, I am getting buy one get one, so I am getting two t-shirts. So whatever input services, capital goods which are being used for those t-shirts for that offer, that credit is allowed. That is not a problem. In any case, supplier is charging something, because then discount including buy more save more. So in mall we go, the offers are like that: buy 10,000 get 10%, buy 20,000 get 20%, and so on. So in this case again same thing, it is clarified that supplier will be entitled to avail ITC. There is no change in ITC. Okay, so discount is, for discount also we have seen in the value chapter. See, these discounts are recorded in the invoice and these discounts were known at the time of supply. So deduction of discount is also available and you can take the ITC also. That is also not a problem. Next, secondary discount which are not known at the time of supply and they are offered after the supply is over. Such discounts are not excluded in the value of supply. There is no impact of availability or otherwise of IT. So there is no impact on availability or otherwise of ITC in this case. Okay. Next, special circumstances enabling availing of credit. Availing of credit. Okay. So these are the cases when you can avail the credit. You remember, if you are switching from composition levy to normal levy, or your taxable supply, your exempt supply is now becoming taxable supply, or you are applying for registration within 30 days of your becoming liable for registration, or you are applying for voluntary registration. In all these cases, you are entitled for input tax credit, because now in future you would be paying the output tax, so now you are entitled for input tax credit. Okay. So you can take the credit, your credit is entitled on inputs as such held in stock. You will be entitled for that credit. Inputs contained in semi-finished goods held in stock, inputs contained in finished goods held in stock, you would be entitled for the credit. Okay. So we are discussing these, for example, from composition to normal if you are coming. So what credit you can take? You can take credit of entitled for credit of inputs held in stock, inputs contained in semi-finished goods, inputs contained in finished goods held in stock, In case of your exempt supply is becoming taxable, you what credit you can take? Inputs held in stock, inputs contained in semi-finished goods held in stock, inputs contained in finished goods held in stock. In case of capital goods, in case of exempt supply becoming taxable supply, in case exempt supply becoming taxable, capital goods exclusively which you have used earlier for exempt supply, you have not taken the credit, so that you will take reduced by 5% per quarter or part thereof from the date of invoice. Okay. So in case your exempt supply is becoming taxable, you will get the credit of capital goods also. What credit you will get? Whatever the credit was on the capital goods, reduced by 5% per quarter or part thereof from the date of invoice. Okay. So for example, 2 years you have used it for what? Exempt supply. So for 2 years, these 8 quarters credit you will reduce and rest credit you will take. Okay. ITC shall be claimed with corresponding details furnished by the corresponding supplier. Okay. Then which ITC will take? On the day immediately preceding the day from which he become liable under regular scheme. So for example, you are coming from composition to regular, so whatever is the stock is there, on the day immediately preceding the day from which he become liable to pay tax under regular, you will take the credit. In case your exempt supply is becoming taxable, in that case, on the day immediately preceding the day from which his supply becomes taxable, you will take the credit. Okay. If you have applied for registration within 30 days, or you are applied for voluntary registration, then you will get the credit of inputs as such held in stock, then inputs contained in semi-finished goods held in stock, inputs contained in finished goods on the day immediately preceding the day he becomes liable to pay tax, or on the day immediately preceding the date of registration. In case of voluntary registration, you will get the credit. ITC you will get. Okay. And the ITC in all these cases will be to be availed within 1 year from the date of issue of invoice by the supplier. Last 1 year invoices you can get. Of last 1 year of invoices, whatever is kept in the stock, you can get that credit. You cannot say like 4 years before invoice you can take the credit. No, not at all, not allowed. Okay. So this is what the circumstances. There are 4 circumstances when you can take the credit. Then filing of electronic declaration giving details of inputs held in stock contained in semi-finished goods, finished goods held in stock, capital goods on the day immediately preceding the day on which his credit become eligible. So you have to file an electronic declaration. This declaration is to be filed within 30 days of becoming eligible to avail the credit, and details of one about to be certified by the chartered accountant, cost accountant. If aggregate claim of the GST, CGST, SGST, IGST is more than 2 lakhs rupees, then there is a certificate of CA or CMA is required. Then the certificate of CA or CMA is also required. Okay, I hope it is clear. Now next, special circumstances leading to reversal of credit or the payment of the amount. So now there are circumstances of what leading to reversal of credit or the payment of the amount, that we'll see. So registered person who has availed the ITC when you are switching from regular scheme to composition levy. Now, these are the circumstances of reversal of credit. Okay. So when you are switching from regular scheme to composition levy, or your supply is getting, for example, your supply was taxable, now it is becoming exempt from GST, or you are cancelling the registration, or you're cancelling the registration. So all these three cases, now you will reverse the credit, because now, for example, you're going into composition levy. So now you have to discharge the tax at a very, low rate of taxes. Or if your taxable supply is becoming exempt, so now you need not, you need not pay any taxes. Or if you're cancelling the registration, or if you're cancelling the registration also. So in all these cases, if you're cancelling the registration, in all these cases, now in the future you're not required to pay taxes, So obviously the input tax credit also, what you will reverse, what credit you will reverse, that we'll see. Amount to be reversed is equivalent to ITC on inputs held in stock, inputs contained in semi-finished goods, finished goods held in stock, or capital goods on the immediately preceding the date of switchover, date of exemption, or date of cancellation. Immediately preceding date. Okay. So from example, for say from 2nd November you are cancelling the registration. So on 1st November evening, whatever the stock is there, you have to reverse it. Okay. What is the manner of reversal? We'll see. In case of inputs, what is the manner of reversal? Proportionate reversal. It will be based on whatever the corresponding invoices. You will do the proportionate reversal based on corresponding invoices. But if invoices are not available, then you will take the market price. On the basis of market price, on which date? On effective date of switchover, exemption, cancellation would be used. If you are using the prevailing market price, then it should be with due certificate from CA or CMA. Certificate of CA or CMA is required in that case. Next, in case of capital goods, reversal will be on pro rata basis pertaining to remaining useful life, taking useful life as 5 years. Okay. So in case of capital goods, the reversal will be on pro rata basis pertaining to remaining useful life in months, taking useful life as 5 years. ITC to be reversed. So total life of capital goods you will take it 5 years. Already if you have used it for 3 years, for example, you are using it for taxable. Now you will reverse it for 2 years proportion, you will reverse it. Reversal amount will be added to your output tax liability. ITC to be reversed will be calculated separately for ITC of CGST, SGST, UT, GST. Now, electronic cash or credit ledger will be debited with the amount. Balance ITC, if any, will lapse. For example, now, the reversal amount is, say, by all these calculations, the reversal of ITC comes to 2 lakhs rupees. Okay, the reversal of ITC comes to 2 lakhs rupees. By all these, it comes to 2 lakhs rupees. In your electronic credit ledger, there is amount of 3 lakh rupees. Then 2 lakh you will reverse, 1 lakh will lapse. 1 lakh will lapse. But if your electronic credit ledger has 1 lakh rupees, then in that case, what will happen? So if your electronic credit ledger have 1 lakh rupees, then in that case, you will reverse 1 lakh. And then you will pay 1 lakh, you will deposit 1 lakh by electronic cash ledger, and then you will reverse that also. Okay. So I hope it is clear now. Next is supply of capital goods and plant and machinery on which ITC has been taken. So now if you are supplying the capital goods, or the plant and machinery, on which ITC has been taken, you have taken the ITC. Now the amount to be paid is equivalent to higher of the following. Now when you are supplying it, the amount that you will pay would be higher of what? Higher of ITC on capital goods or plant and machinery, less 5% per quarter or part thereof from the date of invoice, or the tax on transaction value of such capital goods or plant and machinery, or the tax on transaction value of the capital goods or the plant and machinery, whichever is higher. So amount to be paid would be higher of what? ITC on capital goods, plant and machinery, less 5% per quarter or part thereof from the date of invoice, or the tax on transaction value, whichever is higher. If the amount at 1 exceeds the amount in 1 exceeds the 2, then reversal amount will be added to output tax liability. Okay. So in case of supply of capital goods, plant and machinery on which you have already taken the ITC, the amount now you will pay will be higher of the following. Higher of what? ITC on capital goods or plant and machinery, less 5% per quarter or part thereof, or tax on transaction value, whichever is higher. Okay. If the amount of 1 exceeds 2, then the reversal amount will be added to output tax liability, and separate ITC reversal to be done for CGST, SGST, UT, GST, IGST. Okay. And tax may be paid on transaction value in case of mold, dies, bricks and fixtures. All these, the tax may be paid at the at the what at the transaction value. Okay, so very simple. In case of capital goods, plant and machinery, two things, higher of these two, whatever is the ITC taken less 5% per quarter or part thereof, or tax on transaction value, whichever is higher that you have to pay. Okay, now next. Transfer of unutilized ITC on account of change in constitution of the registered person. Now what is this? Now what is this? Transfer of unutilized ITC. These are some unutilized ITC on account of change in constitution of the registered person. On account of change in constitution of the registered person. So whatever is the ITC left would be what? Transferred. So in case of, for example, sale, merger, amalgamation, lease, transfer of business, unutilized ITC can be transferred to the new entity if there is a specific provision for transfer of liabilities to the new entity. So in case of sale, merger, lease, in all these cases, in case of sale, merger, amalgamation, lease, transfer of business, unutilized ITC can be transferred to what? New entity. If there is specific provision for transfer of liabilities. Okay, the inputs and capital goods so transfer shall be duly accounted for in the books of the duly accounted for by the transferee in the books of accounts. The inputs and capital goods which will be transferred will be duly accounted. Okay, so very simple it is. In case of transfer, the ITC will be transferred to the transferee. In case of demerger, what will happen? ITC will be apportioned. In case of demerger, ITC will be apportioned in the value of assets of the new entity as per the demerger scheme. So how it will be apportioned? It will be apportioned on the basis of value of the asset. The value of assets means the entire assets of the business, whether or not you have taken the ITC. So this is very simple, and this is the only important part in this. Okay, now so here we complete one of the very important chapter, input tax credit. The questions from block credit regularly come in exam. Okay, so now all the very best beta, and we'll stop our discussion over here for this chapter. Thank you for now.